What's up, everybody? Mr. Zero to Infinity says hello for episode 63. Let's get straight into this one and pull up my Zero to Infinity stock portfolio that I've been documenting since episode 1. If you've been following with the episode series, you'll notice I bought 6 new stocks as we entered June 2021. In my opinion, these are some of the best high growth stocks that I believe are undervalued right now. To buy these 6 new stocks, I had to make some adjustments to the portfolio. Since my last episode, I sold 6 shares of Shift4 Payments stock. That position dropped from 12 shares to 6 shares. I also sold 4 shares of Starbucks stock. That position dropped from 6 shares to 2 shares. The reason I sold Shift4 Payments and Starbucks is because I'm seeing a better risk-reward proposition with 6 new stocks. Outside of taking some profits from these 2 holdings, I also added some cash to the portfolio. The last portfolio balance was around $13,400. Looking at the portfolio now, at the time I took the screenshot, we're at $15,500. Make sure to click that like button if you've been following along with these updates. For anyone new, I haven't touched the other remaining holdings since the last episode. Those stocks include, from top to bottom, Fiverr, Shopify, Apple, Penn National Gaming, Square, Skills, Spotify, and Costco. Before I go over the 6 new stocks I bought, remember, all my episodes are for entertainment purposes only. I am not a financial advisor, and anything discussed on this YouTube channel should not be viewed as investment advice. I am only sharing my personal ideas and opinions as I document the journey of growing just one of my stock portfolios from zero to infinity. Always do your own due diligence and never rely on any of my information when it comes to investing. Now, let's start from the bottom and work our way up to the top. For this episode, I'm going to go over a brief overview of why I bought each growth stock that I believe is undervalued. If there's further interest in me going over a specific stock, just let me know in the comment section below and I'll make sure that I'll do another video in the future. Alright, the first stock and my smallest holding at the time I took this screenshot is GLBE online stock, ticker GLBE. I bought 5 shares. GLBE online is a stock name not a lot of people are familiar with because it was a recent IPO, and it's a platform that is built for international shoppers to buy seamlessly online and for merchants to sell from anywhere in the world. It has a volume-based revenue model, making a percentage on gross marketplace volume from hundreds of brands. To simplify what the company does, let's say you built an e-commerce website and you're based in the United States. Shoppers in the United States buy your merchandise with ease. Where GLBE Online comes into play is when you want to sell your products to international shoppers that live in other countries outside of the United States. GLBE helps with language translation for your entire site, adjusts the price of products to the shopper's local currency, provides local payment options, handles compliance with local shipping services, returns, management, delivery methods, and the list goes on. There's a whole lot of friction when it comes to getting a product from point A in the United States to point B in another country, as well as from shipping a product from another country to the United States. Shopify, which is my second biggest holding in my zero to infinity portfolio, recently agreed to a partnership with GLBE Online, and in return owns a percentage of the company. Shopify will essentially be providing a lead source for GLBE to add Shopify merchants to the platform. I think there will be a long-term trend of merchants and brands looking to sell products directly to shoppers all around the world rather than in just one local country. I believe GLBE is in a great position to take market share from this trend. The second stock I recently bought is Bigg Digital Assets, ticker BBKCF. I bought 150 shares. Bigg is a very small Canadian company that has two main assets. The first asset is Netoins, which is a small cryptocurrency brokerage in Canada. The second asset is Blockchain Intelligence Group, which includes a technology called QLUE with a Q, QLUE, for forensic investigations for tracking cryptocurrency transaction activity, and BitRank Verified, a risk scoring technology for financial institutions and cryptocurrency exchanges. Bigg Digital Assets is a highly volatile stock, especially since it's a very small market cap stock. The trend I wanted to have some exposure to is the cryptocurrency and digital assets trend that we're seeing right now. Bigg Digital Assets has Bitcoin on its balance sheet, so this stock will move up and down with the overall crypto market. Bigg Digital Assets has big growth plans over these next few months, so I'll be monitoring the story very closely to see if I want to add or reduce my position in BBKCF stock. The third growth stock I bought is OLO stock, ticker OLO. I bought 19 shares. The reason I started a position in OLO is because I want this portfolio to have some exposure to the online ordering trend that's going on right now. I want to be a part owner of a company that essentially makes recurring subscription revenue from the restaurant industry and also has a take rate on each transaction that goes through the OLO platform. OLO has over 400 plus enterprise restaurant brands spanning over 69,000 locations based on the recent Q1 earnings report. OLO is another new stock that hit the stock market as an IPO. OLO raised money from the IPO to be in a position to be one of the most dominant platforms that helps restaurants have their own tech stack to compete with delivery syndicators like DoorDash, Grubhub, and Uber Eats. I believe OLO is becoming the Shopify of online ordering. OLO helps restaurants recapture and better monetize their customer relationships. If I was a restaurant owner, I don't want to get Amazon, which means platforms like DoorDash and Uber Eats taking a larger and larger piece of each digital order, ultimately reducing my profit margins. OLO allows each restaurant brand to have a direct relationship with its customers, which eliminates the reliance on marketplace middlemen. We're moving along. The fourth stock I bought is Atarian stock, ticker ATER. Atarian was formerly Mohawk Group Holdings, ticker MWK, before they changed the name. I bought 40 shares. The reason I started a position in Atarian is because I want to own Amazon shelf space. So what does this mean? Well, if you go to Amazon.com and search a product, there's a ranking algorithm that displays the best products that match your search criteria. The first set of products are sponsored advertisements, and then the next set of products usually are ranked high up on the list since they have the most 5-star ratings. Having hundreds or even thousands of 5-star reviews are a competitive advantage, in my opinion, to any Amazon third-party seller looking to launch a product. Think about it. If you are looking for a product on Amazon and you see similar product listings, one listing with 1,000 plus 5-star reviews and another listing with only 5 plus 5-star reviews, which product will a consumer lean towards buying? I know for me, I'd probably buy the product that has 1,000 plus 5-star reviews. So the reason I bought Atarian stock is because I know all about the history of Amazon FBA sellers. There was a trend not too long ago where hundreds of ads would pop up on YouTube promoting how easy it is to sell products on Amazon. Basically, you have to contact a manufacturing plant in China, order a big supply of a product you think will sell on Amazon's marketplace, then ship the order from China directly into Amazon's warehouse. Easier said than done, but there were a lot of individuals that took advantage of this Amazon FBA trend and made a lot of sales. What a lot of Amazon FBA sellers don't tell you is that even though they may show off millions in sales, By the time all of the Amazon fees are paid, a big percentage of your profits have to be rolled back into purchasing larger and larger orders of inventory to keep the Amazon store running. Based on what I know about the industry, I believe we are starting to see the trend of large Amazon sellers like Atarian starting to acquire these smaller fish looking to get out of the competitive Amazon FBA business because of the never-ending cycle having to reinvest right back into inventory. What's unique about Atarian is it has an in-house technology that handles all of the complicated intricacies of running a successful business that sells on Amazon. Real-time advertising, supply chain management, fulfillment, the list goes on. I think Atarian is in a great position to acquire these Amazon FBA businesses for reasonable prices, which will allow the company to continue to scale up and potentially become one of the most dominant Amazon third-party sellers. We're winding down here. The fifth stock I bought is Voyager Digital, ticker VYGVF. I bought 38 shares. I believe this is one of the best investment opportunities in the cryptocurrency space. Voyager Digital is a very small company that trades on the Canadian Stock Exchange. It's a company that's growing its top line revenues extremely fast. Voyager is similar to Robinhood for cryptocurrencies. It's a downloadable app on your mobile phone, and it allows users to buy crypto assets with zero commission and lets their users earn attractive interest rates. Voyager makes money from the bid-ask spreads. I believe Voyager is a long-term threat to other big platforms like Coinbase since it has a lot more cryptocurrencies on its platform to trade. I recently downloaded the Voyager app to get $25 of free Bitcoin from the Refer a Friend program. If you have any interest in crypto and opening an account to get $25 free Bitcoin, then feel free to sign up using my unique code on your screen. We'll both earn $25 Bitcoin once you trade $100. I'll leave a link in the description below. Between me and you, when I invest in a publicly traded company, I like to do my own research, and in this case, using the Voyager app to see what it's all about. At this time, yes, the app needs some improvements, in my opinion, and I'm sure the management team is on top of most of the complaints coming in about the app crashing or having to wait a long time for deposits or withdrawals to process. With a company like Voyager, there will be growing pains in a new industry. For that reason, I'll be looking to buy shares of Voyager Digital as cheap as possible when the stock crashes. It's definitely a volatile stock, especially when the overall crypto market crashes rapidly. It won't be a stock for everyone since they won't be able to stomach the ups and downs, but I personally believe there is a long-term growth story with quite a few ways to monetize its growing user base. So I'll be following that one closely. The sixth and final stock, which is my fifth largest position in the portfolio at the time I took this screenshot, with over a 7% weighting, is WeCommerce, ticker WECMF. I bought 106 shares. This is another very small Canadian company which I bought at many different prices over the past couple of weeks. The reason I bought this unknown stock to many is mainly for that reason. Not a lot of people know about it. WeCommerce is a holding company that has a family of businesses that make money on the Shopify ecosystem. I have a long-term bull thesis on Shopify stock, which is my second largest holding at the time I took this screenshot. WeCommerce essentially allows me to invest in small companies that sell apps, themes, or provide agency services to Shopify merchants. The management team over at WeCommerce has access to founder-led Shopify businesses that are looking to sell their profitable companies quickly and easily. A recent example is a Shopify app called Stamped, which was WeCommerce's recent acquisition that provides a monthly subscription for Shopify merchants to display product reviews on their Shopify website. Stamped is one of the most installed apps on the Shopify App Store, and it has over 5,000 plus reviews, which is a competitive advantage to anyone looking to build a comparable app from scratch. For the same reason I bought Atarian for the Amazon digital shelf space, I want my zero to infinity portfolio to have some exposure to some Shopify digital shelf space. Shopify is a growing platform, and the bigger it gets, with more and more merchants joining the ecosystem, the more and more customers Stamped and WeCommerce's other family of businesses benefit from. WeCommerce is another stock that I bought at multiple prices with a cost basis of $12.17 at the time I took this screenshot. I'll be looking to reduce my cost basis if I get an opportunity. I personally think sometime in the future, I'll be able to sell off the shares with the higher cost basis and let the cheaper shares ride as I follow WeCommerce's story closely. So to wrap up this episode, my goal with these 6 new stocks is to level up my zero to infinity portfolio and break the next milestone of $20,000. The portfolio broke $10,000, and now it will need a boost from these 6 new stocks as the weeks and months tick forward. If you've been following along with my portfolio updates each episode, you already know I like to position small amounts of my capital into stocks that I personally believe will multiply my money many times over long periods of time. 2 good examples looking at my portfolio are Fiverr, which turned my cost basis of about $654 into $4,700. And Penn National Gaming, which turned my cost basis of around $173 into $1,116. Over these next few episodes, I'll be making adjustments to my zero to infinity portfolio so I could take advantage of the opportunities I'm seeing in the current market environment. These adjustments may result in taking some short-term profits by reducing my exposure to certain stocks and increasing my position in other stocks. I usually attempt to get shares at the lowest cost basis possible before the shares take off and ride up over a long period of time like Fiverr and Penn National Gaming. As mentioned earlier, most of my stock positions have different purchase prices and different lot sizes of sometimes just 1 share and other lot sizes of multiple shares. The reason I don't buy a lot of shares at only 1 price is because I know I can't time the bottom of a stock perfectly. For this reason, I prefer to dollar cost average my positions over time. Sometimes I'm a bit early with my entry positions, so I may end up selling shares with the highest cost basis at a very small gain, hoping to buy cheaper shares at a later time if the opportunity presents itself. If a stock continues to run up and never sell down below my cost basis, I'll probably just let those shares run up and add to my position if I believe the price is still undervalued. Also, keep in mind during times of market volatility, I may have to make some quick trades to make sure my portfolio matches up with my conviction level long term. This may include selling entire positions of certain stocks so I can put more capital towards my higher conviction stocks. Right now, there are 16 total stocks in the portfolio. Now that there are many more stocks since my last episode, I have to make sure that the total percentage weighting of each stock is high enough or low enough as the stock market is constantly going up and down. This may include selling out of specific stocks to raise capital to put towards my higher conviction stocks that I believe have more upside long term. I'll make sure to keep you updated in future episodes if I make major adjustments to the portfolio. So stay tuned. Let's end it there. Play the music. If you made it this far into the episode, then make sure to subscribe and click that like button to support the channel. It helps immensely with the YouTube algorithm. Feel free to watch my earlier episodes of how I'm growing one of my stock portfolios from zero to infinity. One of my favorite comments from last episode is on your screen. All my episodes are meant to be watched in order since the stock market is always changing and there are always new trends to be found as the weeks tick forward. If you have any questions that you'd like me to feature in a future episode, feel free to email Mr.0toinfinityquestions@gmail.com or hit me up on Instagram at Mr.0toinfinity. Thanks again for watching. Let's keep building from zero to infinity. You got this.